Hello everybody, this is Eddie Gabor with Key Advisors Group, and I wanted to send this video out to everyone to kind of discuss some of the things that we've been talking about on national TV, as well as some of the things that we've been sharing with clients, and why we've been making the pivot to be more conservative with our assets that we're investing for our clients for 2021. We do think it's going to be a very challenging year. And really the biggest reason for that is we believe the Fed has made one of the biggest policy errors in modern history. And that policy error that they made was not recognizing that inflation was accelerating at a historic level in 2021 and continuing to kick the can down the road on tightening monetary policy as well as reducing the tapering program. The best time to tighten, in our opinion, and reduce the tapering that they did to try to get us out of the depression-like market that we were in is when the economy is growing, when the markets are healthy. And they had a golden opportunity last year to do that slowly and incrementally. And we were sending out warnings that if they delayed it, then they would be put in a position in the next year, which we are in now, to accelerate tightening, accelerate tapering, and that's when you damage markets. So I don't want to be too critical on the Fed, but I'm calling it as I see it. I will say this, I think they did a wonderful job during I call it the corona crash of the market, when they came in with a bazooka of liquidity and did everything in their power to put a bottom to the economic pain that we were feeling, okay? I think they acted swiftly, they acted quickly, and they went too much versus too little, and I thought, in my opinion, that was the best thing to do at that time because we were just in uncharted territory. And I firmly believe if they did not do what they did, that we probably would have been in a depression. So in my opinion, I give them an A+ for how they handled that. So where I'm giving them an F is in 2021 when they were continuing to say that inflation was transitory. So I want to be fair and objective here, compliment them where I think they did a wonderful job. But now at the end of the day, here's where we are. We have a Fed that delayed tightening too long. And now they are forced to accelerate tightening and tapering during an economic slowdown. And if you've been following me on Fox Business or other networks that I'm on, or following us on YouTube, this isn't the first time you've heard this. I'm going to continue to repeat it as much as I can to educate investors that the bottom line, in our opinion, is this economic cycle is changing, and it's changing quick. When you look at markets, we've already seen crypto, we've seen small caps, we've seen other asset classes take a pretty sizable dip from the November 2021 highs. We think it's just getting started. And for those of you that have followed me for years, you know my nickname is Common Sense Bull, so I'm usually bullish because there's lots of reasons to be bullish. But my job to my clients is to look at things objectively, and when I see things that are very problematic is to bring that to their attention. And not just bring it to their attention, but actually do something about it. And so we've been extremely active in our portfolios and trying to lower as much risk as we can and going into lower beta plays, things like gold, consumer staples, utilities, healthcare, some real estate that's tied to rent that we think can hold up okay. And we may, at some point in time in the coming weeks, aggressively raise cash. We're going to have to wait and see. But we are playing full-on defense for 2022. We came into the year playing defense, and as each week goes by, we are continuing to get more and more confirming information that that is the right call in our opinion. And so we're going to continue to actually increase our defensive playbook as we go into the second quarter. Because when that Fed starts raising rates, and if they do it in March, I do not want to get in front of that freight train, because asset prices that have the highest beta or highest risk, in our opinion, are going to be the ones that continue to get clobbered in this environment. It's been a while since we've seen any type of sizable correction. Resets in the market, in my opinion, are healthy. And more than likely, if we see what we believe is going to come to fruition with these major corrections, we'll be a buyer of that dip if the backdrop supports it. But right now, due to the biggest mistake in monetary policy and modern history, with not recognizing inflation when it increased at, again, historic rates, is the reason why, in our opinion, we're going to feel a lot of pain in 2022, especially in the first half. The only way we do not, in my humble opinion, is if the Fed decides to all of a sudden kick the can down the road even further and not raise rates. I don't think that's going to happen, because if they don't raise rates, inflation's going to get even worse. So they're in a lose-lose situation. They're going to have to raise rates to tame inflation, but at the same time, the market's not going to like that, because anytime you raise rates in a decelerating economy, in our opinion, it can be extremely problematic. Okay? So that's why I'm being a little critical on the Fed. I gave them credit where credit's due, but at the end of the day, as I look at things objectively, I have to bring to investors' attention why we are extremely bearish short term on your higher beta plays. Okay? I hope you found today's video to be educational and things that you can apply to your own personal net worth for you and your family. Please, again, subscribe to our YouTube channel for videos that we try to send out every single week to try to help the everyday investor. Thank you, and hopefully you can make this week a winning week.